Hey everyone. So this week it's going to be an audio episode. I was invited to have a chat with Owen Healy, a blockchain recruiter with over 30,000 followers on LinkedIn. With good reason. His memes are absolutely hilarious, and more to the point, they are funny because they show real insight and understanding about this sector and what it's like to work in it, which is, of course, exactly what you want from the best recruiters. I'll provide a link to his LinkedIn in the comment section below. We talked about tokenomics, of course, and saw how it shows up in a diverse range of professional roles in the Web3 and blockchain space, and talked over some of the different kinds of tools that you make use of to solve problems depending on which role you choose to go for. So I really hope you find it an interesting talk. I'll be providing links to all the questions that I was asked and all the learning resources that I discuss in the interview. And there's also a live Q&A section at the end, which may be of interest. So enjoy.
Roger, thanks
Ec-
very much for joining us. Much appreciated on my side. And I know the people here will get great insight into tokenomics over the next few minutes. So it's great to have you, and it's much appreciated. And I guess you're not really affiliated with one particular project. You're affiliated with multiple projects. You've assisted all sorts of projects across the industry, from layer ones to gaming projects to cross-chain projects. You have a lot of clients across the space, and a lot of people rely on your advice in the area of tokenomics. So maybe you might obviously give people an introduction to who you are, how you got into the space, and all that good stuff, if that's okay.
Absolutely. I'm really grateful to be on here. I really like what you do and have been following you a while. So excited. All of what you said about me there is true, but let me just dial that down a bit because, this is an entrepreneurial space. I certainly work on assisting a lot of projects with these very varied designs, but not all of them are above water at the moment. I only got into the sector very recently in 2020, and it has been an absolutely massive learning journey for me through that process. But yeah, I'm absolutely happy to share my experience. How I got in is a bit of a colorful story. I left a career in renewable energy finance in 2016 to work as a freelance business modeler, and that would involve me sitting down with clients, figuring out what their situations were and their needs, and then build them a quantitative Excel based model to either help them raise money or to manage their business and finances better. And I was leveraging the flexibility of this setup to live and work all around the world way before remote work became mainstream. So when COVID struck, I happened to get locked down on a tropical island alongside a bunch of blockchain entrepreneurs. And we all had ample time to get to know each other. And they saw what I was able to do in terms of modeling business logic. And they asked me to help them model some tokenomics for a project. I was a blockchain skeptic at the time, but I thought it would be a fun learning opportunity. So I said yes. Their listing went well in that crazy COVID market. And because they were well connected, I was soon swamped with a lot more work than I knew what to do with. And a couple of years later, this somehow leads me to interviewing the ex Prime Minister of the UK, Boris Johnson, about blockchain at an event in Singapore that was organized by one of my clients that I picked up along on that journey. So it has been quite the ride.
Yeah, wonderful. Brilliant. And yeah, no, it's fascinating how you embraced working as a digital nomad as well, long before I suppose the term became popular or became a done thing. And I suppose just, yeah, we'll get to this. Obviously, if being a blockchain skeptic previously, we might get to that later, because given your profession, I know that you're still a bit of a blockchain skeptic in some respects. So I'd love to, we'll get to that later. But I suppose from a tokenomics perspective, do you mind, just for people that maybe aren't familiar with the term, if you could maybe just give a quick overview of what is effectively tokenomics?
Sure. So I'm not going to police the term here. Different people have different answers to what tokenomics is. For many people, it's narrowly about how many blockchain tokens there are, how that changes over time, and how that impacts the token's value. For me and for many others, It's a much more bigger thing than that. It encompasses all the components, rules, processes, people, and behaviors that all together make up an economy on the blockchain, and how that all shapes how people behave and what they do with valuable, scarce resources. That's a view of tokenomics that brings it much closer to the definition of economics in general. And the point of all this is to get to some kind of view about how that system and its parts are going to evolve or change over time, either to come to a view about whether the token and this project are a good investment, or to decide how we design and manage these systems in the first place so that they can deliver a valuable product or service sustainably. So that's how I'd define tokenomics.
Wonderful. And yeah, you mentioned investment. Yeah, so maybe we can touch on maybe equity and I guess this is, I suppose, an area that you have rich experience in, although you will say that you're quite late into the blockchain space, but it is an area that you have a lot of experience in over the last couple of years. So I suppose, could you maybe give the audience or any aspiring entrepreneurs within the blockchain space some advice as to maybe when is a token sale better than fundraising and vice versa?
Yeah, well, the first thing I'd say is that it is worth acquainting yourself with both approaches, right? There are a lot of people who think that just because they're building a blockchain project, the only way to go is with a token sale, and they may not appreciate that there are very different trade-offs involved between these two methods. And one way of getting the differences across, I think, is about it being like the difference between a fling and a marriage. Okay. With a marriage, you have these big upfront costs of having the wedding and all these long term legal implications that come along with it. So, equity fundraisers also involve similar upfront costs for all parties alongside a more regulated and expensive committing legal process. And because equity investors have fewer options for generating a financial return from their early investments, and those returns are likely to occur further into the future, even that all sounds like a bunch of difficulties, it can actually work to the mutual benefit of both sides because it forces them to be much
Mm.
more careful about who they pick and how long they stick it out for to really build something together. If we look at token investing, which is much more like a fling in this analogy, blockchain, and that's because blockchain tokens were founded on this premise of radical individual economic freedom. And that means that anybody who holds a token, including investors, are free to sell it when they want to generate a financial return when they want. And that makes it much easier to find investors, but it also makes it much easier for them to leave you um, and sell tokens into your market, depressing the price of your token while your venture may still be at an early or developing stage. Now, we've invented these vesting terms, right? That slowly release tokens over time in order to try and mitigate or control this to some extent. But nevertheless, these vesting terms are purposefully drawn up to make sure that investors have the option to sell, to exit, much earlier than they would with an ordinary equity investment, which may tie up their hands for 5 years or so. Now,
Yeah.
this is not to say that there are no long term oriented VCs or token investors out there, but now you have to do the extra legwork to figure out who those long termers are. And it's not something that the investment process lends support to more naturally as it does in the equity case.
Mhm.
But with all that said and done, the fact is that for many projects, certainly when the market is hot, the current disparity in the regulatory treatment between equity fundraising and token fundraising just makes token sales so much easier and cheaper a way of raising capital that overrides all other considerations. And I can accept and support that as a valid business conclusion. But founders should still be aware of the risks that come with a token fundraising approach so that they plan and prepare for them accordingly.
Yep. Brilliant. I'm just actually taking down some notes here myself. So that's fantastic. And I guess one thing that I've been quite interested in is treasury management. And I notice on one of your videos on your YouTube channel, which I'd highly recommend everyone checking out, token design. You mentioned a term that I suppose would be lost on a lot of people in the crypto space. Yes, cash is king.
Yeah.
And I can understand why people think it's absolute why that might sound stupid, but from if you're a web3 founder managing a treasury, it most certainly is not so. And I've personally seen a lot of jobs lost through poor treasury management. So if you maybe any advice with regards to any project starting out with respect to treasury management.
Yeah, and I speak from a place of having seen things go wrong. So I have had to learn about these things the hard way. Like I said, I came in very much as an outsider, and I've had to take my lessons as they came. I think you can first of all, let me just explain fiat cash is king a little bit. We are all plugged in to the quote unquote real economy. Let's call it the off chain economy if we don't want to sort of like draw a distinction. Like at the end of the day, you have to go out there with your euro, dollars, naira, whatever it happens to be, and buy goods and services out there. So if you, that's all fine and good when your token's riding high, but when it collapses, then you're stuck because nobody's accepting something that's worthless that doesn't convert, right? So, and that's the problem that a lot of treasury managers find themselves in terms of how good principles I would recommend. I think you can get quite far if you remember that phrase and maybe three more things. Don't put all your eggs in one basket. Market value is not the same as liquid value, and always prepare for the worst. So let me explain. We can create tokens out of thin air. This entire sort of fundraising model essentially allows you to self capitalize with tokens that you've digitally printed by code decree. You've said there are this many tokens and this many of them are going to treasury. Norms around vesting means that it takes some time before those tokens become unlocked and available to your treasury to use. But a lot of founders in the last cycle thought that that's all they needed to do. Wait until those tokens unlocked, and that they would then have all the finances they would ever need for anything. And this led to trouble. So going back to the three recommendations, number one, they had all their eggs in one basket. The vast majority of their financial resources were singly concentrated in their own native token. Number two, they didn't realize how much market trading would constrain how much financial value they could tap those tokens for. So you could have millions on your balance sheet, but as soon as you try and spend it, you run out of real buyers in the market, and the price falls down. If you're on a DEX and it's a small liquidity pool, that price change will happen even faster. So you can't spend the wealth you have, and it's really surprising when that penny drops in typically in a very unfortunate time. And
Yeah.
number three, they didn't seriously think about what they would need to do to prepare for when markets fall. It was all about dying hands and hodling all the way to the moon. And part of it is the fact that preparing for the worst event takes you away from the upside exposure that you get when markets are going well. But running a business is not a completely different risk exposure to being an equity investor. If you're an
Yeah.
equity investor, you can tighten your belt if your investments don't perform. If you're running a business, you have costs to pay in fiat, and if you don't have them covered, the whole thing's finished. So
Yeah.
you have to be a pessimist to run a startup, which is contradictory, right? But
Yeah.
but that's there's truth to that.
Yeah. And even
So
speaking of
it's yeah.
pessimism, that when you mentioned in one of your clips as well, how if your project is performing well relative to the other investments that investors may have made, it could the fact that you're doing the fact that your project is doing well relative to their others doesn't mean that they will be there for your project. It might mean that you'll be funding effectively the bad ones effectively.
That's right. That could work against you because a lot of these investors have a portfolio and the success rates are low and they have to make return on that entire portfolio. So, these are things that I've observed firsthand. So it's you just never know. And you have to really prepare for the worst. As I said, in practical terms, I recommend that projects budget off the finances they have already managed to raise up front before the listing. through their private token sales, and that they create revenue processes that collect fees and revenues and liquid, stable tokens wherever they can, and that they have the HR budget to get a real treasury management specialist to come on board to help them with all this stuff.
Yeah, absolutely. And I guess market makers, some good, some not so good, common practice, obviously, in quote unquote Web2 world. But yeah, listen, I suppose to get a better rap in blockchain and non-blockchain, regardless. But I guess in the crypto space specifically, how do you view them maybe generally? And I don't know, is there any red flags maybe when dealing with them to look out for? And is there any kind of
Mm.
warning signs that would make you run effectively?
This is tricky.
Thought
Let's
so, yeah.
let's let let let's begin by stating a fact. We need market making services.
Yeah,
We need them. We need it in order to manage markets, keep prices going, make sure that there's active. We need some form of the service. In blockchain or crypto, market making is not regulated or transparent, and there's serious information asymmetries that work in their favor. And the result of this is that crypto market makers have much more power than their counterparts do in traditional financial markets. And crypto market makers can charge much larger rents and margins because of that. And I'll say that broadly faces you with two sets of risks. One of them is ethical, whether the services they're delivering you are being achieved by ethical means, and the other is a set of risks are economic, whether the market makers end up behaving in ways that ultimately damage the longer term economic interests of your project and your token holders. So, to give you a very clear example, I was once on a call where I was being sold services that in any other situation would be recognized as market manipulation. They were
yeah.
saying, you tell us when you're going to release a positive news story about your project, and we'll make a big green candle on the chart so that people think that the markets are reacting favorably to the news. Straight up. Now, you could say, no, I'm an ethical project. I don't want you to do that. But they still have this tool in their toolkit. And and who knows what else. And their incentive is to maximize revenue. So what's stopping them from using it without you knowing? Today, to mitigate these kind of concentration risks of market power, it's good practice to split up your market making between multiple firms, and the better ones will be upfront and recommend that you do that themselves. But they all know each other, and there's not many of them. So collusion is cheap if they
Yeah.
think that it will be of material benefit. I'm again, as with the investors, I'm not saying they're all crooked. It's all about risks here. I'm saying that it is very challenging to get to the bottom of it to find out, who's playing an honest game and who isn't. And so you just need to do the best you can. And I would say avoid those who brazenly sell you market manipulation services or emphasize outrageous revenue generation as the main value add of their service. Until regulations catch up, I think there may be opportunities to improve the relationship with market makers by looking for better KPIs and creating contracts that maybe align their incentives more with longer term financial goals and strategy rather
Mhm.
than short term revenue extraction. But I don't have specifics to suggest on that yet, as it's still something
Yeah.
I'm looking into in discussion with other professionals who have more contact and experience with market making functions. So
Yeah.
those are the tips.
Brilliant. Yeah, perfect. And I guess your YouTube video as well goes into good detail in respect to what it to become a tokenomics expert. So maybe you could elaborate on that if that's okay. So if I want to be you, maybe in, I don't know, 5 years time, it probably take a lot longer than that. But if I want to be you in 5 years time, what skills do I need to learn? Yeah. So you again, your videos on YouTube and go into good details about the various different modeling tools that once a tokenomics expert should be familiar with. But you might elaborate that in your own words if that's okay.
Yeah,
Thanks.
of course. If I here we run into the earlier issue, right? That we don't have a settled view, a settled definition of tokenomics that has broad buy-in. And I don't think there's a single view on what's needed from professional talent either. I speak authoritatively, but all of the stuff in the video is generated from my own explorations and inquiry into the space and me trying to sort of make the best sense I can, and everything's shifting. But from where we are right now, I see skills and expertise clustering around kind of three areas. Um, one group has a lot in common with traditional financial analysis. So a lot of this work is still very adequately handled in a spreadsheet environment. These skills tend to be demanded on the investment side, but also increasingly maybe for internal finance functions. Those in those internal roles as well, you will need to be able to handle special process oriented tools that maybe allow you to keep proper crypto accounts or manage company token resources effectively and securely. So that's sort of like the more classically financial skill set. In the next group, you have specialists whose work is oriented towards designing or engineering tokens or token economies or protocols. And here it's more about first principles modeling and an analysis, which is doing the heavy lifting, if you will. You'll probably be using Python, perhaps one of the packages that's set up for agent-based simulations like cadCAD or radCAD, which were developed by Blockscience. There are also some more visual builders that are very popular because they kind of invite you in and make the whole sort of planning of the economy much more immersive, reactive, and visual.
Yeah.
Machinations is the leader there. I personally have some doubts about how much that tool can support, but it is demanded as a skill in these more pure tokenomic design roles, and it may be a way into the more codey sort of stuff. And in the last group has much more of an overlap with data science and analytic skill sets that a lot of people in Web 2 will have been developing already and will have a lot of capacity in. They these roles leverage all the data that's
Yeah.
in the blockchain, which remember is just a data structure. And this analysis allows them to create empirically informed views on how protocols can improve their risk management, operations, or business performance. Tool wise, here, we're talking about Python again and its data science libraries, but also SQL, SQL is very, very relevant for getting data from providers like Dune or Flipside. I've just started digging into a training offering that's been created by Covalent, who have also built a lower code but still SQL compatible analytics platform called Increment that has a UX which is much more similar to what users of Microsoft's Power BI and Tableau will be familiar with. As far as I can tell, they're also the first outfit out there that's making a real push for creating business centered analytics out of blockchain data and making good headway with that task. So I'm really excited about them. So these
Nice.
are sort of three areas that I see out
Yeah.
there. Nobody is going to have strong skills in all of those areas at the same time. So see that giant range of technical needs as a positive because it shows you different ways that you could come in, and larger teams will look for diverse and complementary talents. Time and time again, I hear that the ability to communicate, understand business context is really valuable, something that always doesn't come with technical chops, and that actually enthusiasm and interest are worth a lot too. A lot of us in the space, certainly right now, are being kept motivated because we believe in this and we're captured by the imagination or the prospect of what this technology will eventually do for us. So just final point, be aware that tokenomics may not show up in the title of the role here. These are all you might be talking about blockchain analyst, fund analyst, but they're all skills that touch on this question of the tokens and the economic performance. So that's why I'm talking about them all.
Yeah, no, brilliant. And that's a great point. And with regards to the job titles as well, absolutely. And yeah, I guess like again, for people that are here, I'd highly recommend check out Roderick's presentation from ECC as well. It's on YouTube, great 30-minute presentation. And yeah, but I guess speaking of YouTube, you have your own YouTube channel and it is a fantastic resource. And you also have a course on it. You might be able to just tell us a little bit about that if it's okay.
Yeah, sure. Really appreciate you highlighting that. Part of my digital nomad journey began by me creating online courses, which initially were training other finance professionals on these very technical models that are used to finance wind and solar projects, which is my specialism. So after I had this experience with this fundraising in the last bull cycle, I thought it made sense to bring all of that together to create another course there as well. There's a marketing campaign underway, so if it takes your interest and you want 50% off, just enter the code full discount 23 at the checkout. And the YouTube channel was conceived as a marketing support for the course, but I always had this hope that it would grow into something bigger, sharing my best efforts to make sense of this emerging field and my own learning and professional development journey along the way, making a special effort to connect the dots back to sound tested concepts in traditional finance and economics. The channels helped raise my profile, and it's what got me invited to speak at Paris ECC by the Token Engineering Academy, another great resource you should look out for. So I was really encouraged by that invite, being given that opportunity to give that talk live, and yeah, it's given me motivation to keep going with the channel. Yeah, which as you said earlier is called Token Design. So go check it out and sign up if you like what you see.
Yeah, brilliant. I'll leave a link in the comments after the call. But yeah, that's wonderful. I guess before I open the floor to audience questions, I'd just like to ask you, Roger, with respect to working in the industry. You've been in the space for a couple of years now. I suppose given that your area of expertise is rather niche and it's a little bit off field to the type of guests that we'd normally have, I guess I'm just curious to know, like, what differences have you noticed from, say, working in the blockchain space to maybe working in the energy space all those years ago? And like, I'm assuming there's probably a greater level of professionalism in the energy space. I'm not quite sure.
Yeah, this is fascinating actually. One of the funny things that would surprise you about business is how much of it depends on culture and things that are not codified and things that the way they're done that are just done a certain way. I was lucky to begin learning this when I was working in energy, going out to develop projects in Chile. The way of business was doing, even within the energy space, was very different there. Then, when I became a consultant and I was maybe dealing with a real estate modeling brief or a SaaS startup, every single time I was checking in with each one of these customers, they had different expectations around what was needed to get business done and the level of analysis and support required. And there was this, I was, I might say, indoctrinated in doing, thinking about finance and modeling in a very specific way. And I'm really grateful that this sort of opened things up and made me realize, no, there's this interesting, deep sort of ineffable cultural aspect to the whole thing as well. And when we got into crypto, my first exposure was with crypto natives who hadn't come through a traditional finance or business career. And it was a very wild and different way of doing things. But, they had proven themselves successful in their own field. And I said, okay, this is time for me to sort of sit back and learn. And my initial skepticism that I mentioned earlier, I turned that off and I just said, okay, this is time for me to learn. And through the things that I've seen gone wrong, I say, okay, some of the intuitions I had were valid here. And that's why I get a lot of encouragement when I connect with other people who have maybe more of a traditional finance experience and I hear them sort of coming to sort of similar conclusions. And it's not to say that there is tradfi people have it all right and you have it all wrong. We need a synthesis. We needed to I needed to be exposed to the vision and the hopes of what all this is trying to achieve. And yeah, I'd say I am trying to position myself as someone who sort of brings a bit more of that care and rigor into the blockchain space. But I fully respect that there are different cultures in play, and that should be part of what animates industry creation and business. That absolutely has a part to play. So it's more about me choosing where I want to be with that whole thing. I may have lost the thread of the original question there,
No,
but
no, no. I think you surmised it perfectly, to be honest. Yeah, it's all relative, I suppose, in the end. Yeah. and the role of culture as well is yeah, absolutely. What I'd like to do, Roger, if it's okay with you, is to open the floor up to questions, if that's all right.
Yeah, let's do it.
Yeah, brilliant. Okay, so just generally speaking, I'd just like to say thanks everyone for listening in as well. Much appreciated. Given that we've only organised this yesterday evening, I suppose it's amazing to see so many people listening in. And I guess just before anyone asks questions, this isn't a forum for I guess, advice. So don't be asking Roger what tokens he one should or should not invest in. I guess, and nor is it a place for promote random stuff. So just so we're aware. D, how are you? I just try to invite you into the chat. Yeah, how are you, D?
You're on mute, D. There's a button in the lower right of your window. You should be
Yeah,
able to click it
Oh,
to
now
unmute.
you can hear me, hopefully. Good
Yeah.
morning. Can you hear me now?
yep.
Greetings from the other side of the mountain, Owen, and good morning, Roderick. So my question is about the evolution I'm seeing in terms of tokenization. Not sure if this is something you can help with, but I'm curious. We're starting to see organizations such as, say, Casper Labs tokenize their equity with INX supposedly this month. And I'm interested to know your take on this idea of actually allowing, say, staff members release some of their own equity via tokenization and how that for you overlaps with your take on economics generally.
Brilliant. What a wonderful question. Stuff like this can't come soon enough, in my opinion. There are some, going back to what I was saying earlier about the sort of trade offs that come with fundraising with a utility token.
Mhm.
You know, investors are, you're selling this utility token is being developed to do two things. It's developed, probably being developed to have a working role within an economy, and it's also a fundraising instrument. And that actually creates a conflict of interest between stakeholders, right? So the way I illustrate this is, maybe if you could go on mute a little bit. I'm hearing a
Mhm.
bit of crosstalk. Thank you so much, D. So the way I normally illustrate this is, so like saying, if Elon Musk tweets something silly and Tesla's shares dump, that doesn't impact the operations of a Tesla manufacturing plant. Whereas if there is some kind of market event or the investors get back their return, that can interfere with the workings of a token economy that's sensitive to the price there. So I think there is a case for exploring separating out, financial interest from utility interest. That's like a very sort of technical view of this. And then there's just the other fact that, tokens are meant to represent some kind of ownership claim, and there's no reason why we can't encode many of the effective properties of equity ownership into a token. And the whole point is that, for me, I see a lot of the upside from blockchain generally coming from that, the fact that it's a medium that supports a lot more sort of efficient management of resources. So why can't equity rights be natively defined as tokens? So I see all of this as a positive. You're probably aware of the real world assets trend as well, where we're figuring out how to tokenize real estate, rare whiskey, all manner of things. And yeah, I think all of that opens up. I mean, it obviously unleashes all kinds of dangers related to speculation and so on. But assuming we develop good regulations and markets in place, the positive outcome is that we leverage the abilities of blockchain to create low cost, frictionless transactions that admit people across all wealth categories. So all of this I see is positive. I'm not a purist in protecting a certain kind of token design or specification at all. So thanks, D.
Absolutely agree. Thank you.
Thanks very much, D. Master Theodore, you had a question there last week, and
Yeah.
this is probably a better function maybe for her to be answered.
Yeah. Good everyone.
Hey, Master.
Hello. Can you hear me?
Yeah, you're coming through.
Okay. I have three questions. The first question goes like this. If all cryptocurrency are token cryptocurrency, how can a token project be differentiated from a cryptocurrency project? Okay. I'll repeat myself again. If all cryptocurrency are token and not all token are cryptocurrency, how can a token project be differentiated from a crypto project? That's one. And the second question goes like this. If agriculture is a traditional industry, how to tokenize agricultural commodities that won't appear as a threat to government, SEC, and traditional financial institutions? Okay, I'll repeat myself again. If agriculture is a traditional industry, how can we tokenize agricultural commodities that won't appear as a threat to government, SEC, and traditional financial institutions? And the final question goes like this. What is green tokenization? And is Web 3.0 the future of e-social commerce? Okay, let me repeat myself again. What is green tokenization? And is Web 3.0 the future e-social commerce? Thank you very much.
Hey, thank you, Theodore. Great questions, and I took them down because they're meaty. Let's begin with this first one about token projects versus cryptocurrency projects. We are still trying to pin down what words mean in this space. So I usually try to avoid leading with terminology first. I always reach under the hood to explain things in terms of what's going on underneath. And if I encapsulate that in a term, I make sure like everybody's on board with the way I've defined it first. So people mean slightly different things with the terms that you've offered there. So let me suggest that based on my understanding, a cryptocurrency is a token that is narrowly intended to serve as a medium of exchange, and that maybe I'll go further than that and say is not attached to a specific economy. So, Bitcoin, anybody can trade Bitcoin, anybody can trade Dogecoin, but they have no other purposes than to be a medium of exchange that people can send to each other. And gosh, I don't think the cryptocurrency model is very fertile. I think that the utility is going to be better served by stable coins, which are making massive advances at the moment. Why do you want to make payments in something that's going to be up and down? Yes, there are all these philosophical arguments and speculative arguments for what's going to happen to Bitcoin in the future, the independence. But again, take yourself out of your room, go buy some apples, go, farm some land, whatever it is you're doing. You can't do that with something that's as volatile as any of the major cryptocurrencies, right? So I don't think it's a very promising area. Maybe if you're looking at developing more liquidity, lower fees for things like Bitcoin, that's promising, building, making the leaders better than what we have. So I guess I really wouldn't be looking at those kind of cryptocurrencies. As in me, I would be attracted to working on those kind of briefs. And actually going back to what I was saying earlier about treasury management, a lot of these early projects defined, modeled themselves after cryptocurrencies in the sense that their vision for the role they had for the token in their economies was mainly to function as a medium of exchange. And then what they do is they skim like a percentage of that to fund the treasury. But then that actually puts them in and that's a token utility, right? In terms of the narrative, we use this token as a medium of exchange in our special economy that does X. But actually, the fact that they are collecting revenues in terms of this native token jeopardizes the financial operations of the enterprise. And it may be worse to have a token utility that's driven by economic exchange, because that creates outsized risks for the sustainability of your project. And you may instead, my recommendation to projects is to look for other ways you can create utility for your token that's not based around exchange. So that's the best I can do to answer that question. In terms of tokenizing agriculture, the general problem we need to solve and that we are making progress with real world assets is to create the process, the legal structures and processes that link up the physical world and the blockchain world, so that these tokens have some real reliable claim of control over their underlying commodities. Because, what are the ways I try and explain tokenomics or token concepts to people is precisely with this saying that says, environmentalists will say you can't eat money. Well, you can't eat tokens either. So the agricultural example is really appropriate in this case, because you want to be able to eat those agricultural products. So we need to develop more processes to ensure control is maintained, and there's a correspondence between events on the blockchain and events in the physical world, and that it's seen more normal to do business in that way. I don't know how we necessarily avoid tripping wires with the SEC's definition of securitization, if that's what you're talking about. I think actually that we be flexible to think about, how these things are handled. I mean, in the US's case, actually, if there was just pure tokenization of agricultural products, I'm pretty sure that would just land in the CFTC. It would depend on how these things are structured, right? If a token represents one to one, then it would be a commodity. If it's some kind of fund, then maybe that becomes a security. I'm not a lawyer. I'm just speculating, but regulation needs to become, we need to have a more grown up conversation about where some flexibility is due. And hopefully that will arrive in due course. Green tokenization, again, different labels mean different things. There are a lot of classic economic problems that blockchain appears much better place to solve or improve upon than all of our previous technology, right? So things like tragedy of the commons, my actions creating pollution that is suffered by a neighbor, finding ways of mobilizing money that has ethical intent behind it, or at least a certain kind of intent. This being environmental stewardship in this case. I think there are a lot of very exciting opportunities, but defining green tokenization is like asking people to define what environmental social governance is. We all have our own ideas of what that is, and people will differ when it comes to the detail. But there are really big opportunities for valuing ecosystem services, valuing things that prevent the degradation of our natural resources. And I'm very hopeful about those kind of applications. And it's one of the things I keep an eye out for. So that's hopefully, I'm sorry, I think we need to give way to a lot of other people. I hope that's given you some answers.
Thank you very much.
You're most welcome.
Thanks very much, Theodore. Who's next? Tom, how are you?
I'm very well, thank you. More on both. Before we get started, Owen, thank you so much for running this session. Look forward to more to come. And also, Roderick, appreciate the insight into tokenomics and your take on a subject that, really doesn't have that industry or, governing standard. Kind of on the same topic of utility, I know it's quite a triggering word when it comes to economics, but in blockchain, there is definitely, utility that can come with crypto that grants more value to, a holder or investor than equity does in traditional markets. It'd be interesting to hear your thoughts, Roderick, on, your thought process when looking to, maybe model or evaluate a new utility that doesn't have that direct translation over from, a traditional market or utility.
Yeah. So, as I think I was saying earlier, my thoughts on this aren't static. It really varies on a project by project basis. And sometimes I'm look back at the way we do things and think, is that the best way? When I was talking earlier about this issue of whether we want to have financial interests sort of lumped up with the work functions of the token in the same token, when that leads people to draw benefits from it and behave towards it in very different ways. One of the things that I throw out there, just maybe as a rhetorical question or just something to promote thought, is like, we're all fixated on the success metric of a token being that it appreciates in value. And I'm like, okay, why is that? What's the function of value appreciation in this context? Is the promise of value appreciation a way you draw in early users or financial backers? Or does price appreciation actually have a role to play in, the way this economy functions and develops? And I don't think that's asked often enough. But, you know, I'm usually hired by founders who are trying to strike a deal with investors, and the price appreciation of the token is important. As I said, at this point, I'm just sort of throwing that out there as a rhetorical question. There are so many different applications. What I try and do, and there are people. I'm on my own journey at trying sort of like I'm currently like learning coding tools. I'm on my own sort of like study journey to try and figure out how we model things differently. I'm an Excel junkie. I can do a lot in that environment, but I need to check out these other tools as well. So to the extent that I can, I map out an economy. I look at the processes, and then I try and bring an accountant's mindset to it and ask in very general terms, is this thing putting in more value than people are taking out? And specifically, ignoring value that comes in from markets. Because if this thing needs to pay for itself, it needs to pay for itself from its own revenues, right? Not from hype and interest that's going on in the markets. And then, the next step, once I have that sort of like fundamental view of the economy mapped out, we look at what happens when prices appreciate or depreciate. Who are the stakeholders or actors in the system who are impacted by that? And is there going to be a point of price change where it somehow becomes a risk of becoming a critical failure to the system? So, and when you're designing utilities, like, once you've got this map of the economy that's not inherently tokenized, it's just sort of like a map of what's going on. You figure out where the token plugs in, and you think, okay, these players or these participants are going to, maybe we can mint rewards to them, but maybe we burn tokens based on what people are doing in some other part of the system. I'm sorry, if this is very high level or abstract, but that's sort of like as general as I can go. I think try and understand what role what the utility is doing, which people are interacting with it, and what specific process that is going on in that economy, and then look at how price variations might interrupt or disrupt that process to figure out if there are any defenses or regulation that needs to occur to maintain good operations. Any follow-ups to that, Tom?
No, that's really good insight. I think the ability that you were saying there, where you're saying that you kind of map the economy or just map those different flows and then plug in your token is very good, because my background isn't in tokenomics, so it's kind of great to jump to your brain there. And just on sorry, you go.
Sorry, carry on. No, you first.
Yeah, I was just going to say that on that kind of rhetorical that you mentioned earlier, you're talking about, value and why we see that that's kind of the success metric. And you kind of already linked to it earlier, where you're saying that, looking at stables, for instance, they're arguably the best utility of value exchange right now. And, we hope that value stays the same, and we don't see any change. So it's good to think of that question and bring it back to, what does, success look like, and how does then value impact our economies?
Thank you so much. Yeah, it's very much so. I think this, ties in with that sort of broader, more expansive idea of economics that goes behind this approach. What was I going to say there? I forgot what I was going to chime in with. But yeah, thank you for that reply.
No worries at all. Thanks for the time, guys.
Oh, actually, what now? I do remember, Tom. Some of these projects, what they do is they create these flowcharts, these diagrams that map out the economy and map out who the actors are. And when that's done well, that can be some of the most insightful analysis about how a project's set up. And actually, I made one of the videos about the skills that sets focuses on this specifically, because as someone who worked as a financial analyst, it was really striking to me how these flowcharts were actually really important in understanding this deeper mapping of what's going on. Whereas as a financial analyst, you're just looking through accounts, maybe, it got a few formulae. And it's actually, when you're designing the stuff, it's quite tricky to figure out, what to put in and what to take out. So that sort of economic work of mapping, and that's a skill that I think sits much more naturally, is something that software developers and all of these guys who sort of design processes are much more comfortable handling. So that was an interesting sort of thing to observe when I started moving into the space, and how important and meaningful diagramming can be.
That's great to know because, there's so many different mediums of communication these days, and really visual kind of breaks it down to the most easiest understood value. So yeah, thanks guys again. And I appreciate the time.
Thanks, Sam. Mohammed, how are you?
Hello, hi everyone. Hi, Roderick. So, Roderick, I was following you on YouTube when you were here, your speech at EGC. So, I was wondering about the definition of engineering, and there is a conflict between the people who are from financial background like you and the people at Gauntlet and Tarun Chitra and William Lambert, and the people who, who are from Blockscience like Michael Zagan or Angela. So they define token engineering as a system design or verification and optimization field, which is more about simulations and modeling, and they talk more about frameworks and things like which we see in system design, which include system design techniques. So the people from financial background, they certainly they quite confine this field of token engineering to DeFi and these optimizations. Like if we follow the work of Covalent, which is predominantly a financial modeling, I think, company. So they define token engineering as about these interest rates, about these investments, and about these fees of optimization. So why do you think there is this discrepancy? And the problem is that I don't see that these two definitions of token engineering converging at any point, because they are totally going in different directions. So which will be, according to you, will be dominant side of token engineering, which we will see after maybe 3 to 4 years? Yeah.
So I heard a deeper, more substantive points in your question, but I also kind of want to point out that this is one of the reasons why I don't like fighting about words. They are important, but at some point there's so much stuff like, oh, it's not, let's invent a new word, let's invent a new word. But actually what's behind your question is much more about the application of, it sounds to me that it's about the application of where the skills are. And token engineer I was invited to Paris by Token Engineering Academy. I signed up to their course. I think they're a fantastic resource. They did so much for me. I've absolutely no fight with them whatsoever, even coming from a financial background. And I'm not aware this debate, as it were, but thinking about what you said, what I think the token engineers are trying to do is they're trying to come up with general frameworks, right?
Yeah.
And that's a completely different kind of problem. That's like abstracts away from the specific case and says, if we start with a blank sheet of paper and we have a conversation with a person telling us this is what we want, how do we go about, delivering that in a systematic, careful, rigorous way? And there is it's a really valuable, important thing to be able to do. And it is what engineers do, right? They have that process of understanding what the specification is and validating it and so on and so forth. Now, the thing is, we're in this that's a very open-ended question. But if we look at where we have the most developed, tangible, sustainable applications at the moment, it's in DeFi.
Yeah.
So it's natural. It's natural that there will be a whole set of more narrowly domain-specific responses to that design problem that are just limited to sort of DeFi concerns and solutions. And actually, where I think those guys have an interesting advantage is that they have real world data to work with. And I think it's, if you're too much in the abstract modeling space, you run the risk of sort of falling into your own model too much and maybe taking too much reliance from it. But that's a slightly different point. I guess I would reply saying that I don't think that there's a strong conflict. It's just that they have a narrower problem domain. So it makes sense that there's a more defined set of concerns, whereas the blockchain engineers or token engineers are really trying to solve a much more general problem and are essentially dealing with a different question in the process.
Sure. So what I understood that just like in machine learning, we have machine learning engineers, and there are people who specialize in certain domains. So there is a machine learning engineer who specializes in healthcare, and there is another person who specializes in supply chain. Similarly in token engineering, there are people who specialize in DeFi, and they have a very limited type of problem statement, and they are trying to solve those problems. And the people at Blockscience and those people are trying to work on more generic problems in order to scale or make a token engineering comprehensive engineering field. So they are working more on the framework. Actually, this question came from, I was writing an article on my 2-year experience in token engineering and how I navigated into this field. So while I was compiling the resources of individuals who really influenced this field, so there were two sets of people: the people who worked on tools like TokenSpice, cadCAD, Machinations, and then there are people like you, yeah, you like William Lambert from Paradigm, and the people from Consensus or A16Z. So there were two sets of people, and I don't find a reason to how I can relate between these two sets of people, because they are solving totally different kind of problems. They are using totally different kind of skills. So that's why for an aspirant who wants to learn about token engineering, so this kind of confuses them that what actually token engineering is. So that this question came from that perspective.
Yeah, no, I think the way you played it back there is, yeah, meets what I was trying to communicate. Absolutely. And even, I was I was so inspired by this ECC thing. It was my first experience of being with all these really smart people who are all working on these problems. And even they, those guys who are very familiar and committed to these more general approach to token engineering were inspired and took note that there was some very interesting, a different kind of sort of traction that you can get by leveraging on-chain data. And I think these, if we think about this as maybe being like a bridge being built from opposite ends, at some point there'll be an opportunity to meet in the middle. But as we scrap around for sort of like meanings and terms and saying what's this, is that, we're at risk of misunderstanding each other. But now as we begin talking to each other, as we begin meeting, and then maybe we can understand where, we're just working on building the bridge from different sides.
Yeah, actually, that was quite fascinating. I heard all the talks from ECC Barcamp. So the people like you and people from Gauntlet, they spoke at the same platform where there were Chris Paruk and Angela and all those people who were working on tools. So that was quite fascinating for me, because I couldn't comprehend that how these two parallel things will converge. So that gave me slight hint that how we can proceed, just like you mentioned about bridge, that maybe we converge to some point.
Yeah, awesome. Thank you, Mohammed.
Thank you so much.
Thanks, Mohammed. Appreciate it. And yeah, so I don't know, Roger, and these conversations usually don't go over the hour. So I don't know if anyone wants to ask another question. If not, I'll wrap it up. But yeah, no, considering that we only organized this late in the day yesterday, it's amazing to see so many people join. And even as we're well past the hour mark, it's amazing to see that there's so many people still listening in. So I don't know, I might just give final 30 seconds. Anyone want to ask any questions at all, please feel free to raise your hands. If not, I'll finish it up. And I greatly appreciate you, Roderick, obviously. Sorry, yeah. I greatly appreciate you, Roger, coming on, obviously. as well.
There is a reason to believe that the next generation of tokens will have a flat price for usage and yet still be speculative in nature. Is this something you've come across? Is this something you feel is real, is attainable?
I haven't come across I haven't heard about that design. So thinking about it in my head, I'm not sure how that makes sense. How would they be? That starts sounding more like a dual token model again. How could it
Well,
be?
it's that in terms of when, say, for example, when an FT is minted, the price to mint it stays stagnant, but it's based on a ratio in terms of its relationship to the overall speculative price of the token. Now, the maths are kind of complicated, and it is, as I say, more myth than a reality at present. There are a few people playing with this notion. But do you feel that that is something that could happen?
It's hard for this particular case. I feel it's hard for me to get a grip on it without looking at the
Yeah,
maths.
I might
The
actually send you an example. It's
yeah,
just
please
something that I'm
do.
hearing more and more about, and it's piquing my interest.
I think, especially after what what we just went through, it's really good to remember that there's no such thing as a free lunch. If you've squashed volatility somewhere and keep it, so it shows up somewhere in the system. So just be really careful who's holding the bag, because it's usually someone. I don't know if that's implied by this design, but yeah, I don't think I can offer further comment, I'm afraid. But thanks again, Dee.
I may send you some information that I've accumulated on it, because it's interesting in theory, but as you say, ends up holding the bag.
Yeah.
Thank
Thanks. Yeah, brilliant. Yeah, so I might just leave it at that. Again, oh, sorry, Christine, sorry. I'm sorry. Sorry about this, Roger.
No, I'm happy. Like, let's go.
Hello, I'm in the United States and I
Wow.
have been building a memorial verse. And now it's time to take all that information that I've compiled in my 34 years and kind of get it rolling. So I have a few web3 designs and I'm working to get into the metaverse or on a stable engine. I believe that I'm in a room of people that are fluent in these sort of things. So I'm wondering if you can see a vision of this where somebody that is going through a loss, they may get this referral from their funeral home or the cemetery or even the pet shop if they've lost their pet, or the veterinarian. And then they would have a chance to go into this world where we have the tools that are currently on my website, you know, the rest of the story. Immersive keeps people engaged and gives them, rich, full environment, and it could be very conducive to healing. Do you think blockchain could work for this type of a model?
So I think this is a really open question. I'll speak from personal experience and say that the first time I attended a virtual funeral, I was surprised to find myself moved and immersed by the event when I might have otherwise expected not to be. So there is definitely ample opportunity for virtual spaces holding experiences that have emotional weight and significance. And there was a project in France called Ternoa, and they developed a protocol for controlling, from what I remember, I don't know, they might have adapted since then, but controlling rights to digital assets as a sort of like blockchain secured will. But it's really hard to talk about. So to the extent that we can control digital assets and decide what happens with them, and this becomes mixed in with immersive virtual experiences. These sorts of things are interesting things to opportunities to explore, but still very far out. The promise of Web3 has a very long way to develop. But like I said, I virtual funerals are valuable today in the here and now. So I hope you can find something to help out with in that space.
Well, surprisingly, it's like a pour out from many different countries, pretty much volunteering and just seeing the future in this. I think that the project is not one person's project. I think it's everybody's interpretation of what might be healing, and that the communities will come together however they are, in the future over time, that we actually, empower people to build their perception of it. And we provide just the skill set to find the right professionals for grief support, because no one person is going to be a grief counselor in there, and no one person is going to be, but the final disposition, what we found is climbing to cremation to the point of, no return. And so the traditional funeral casket, blah, 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 it's going to trickle out and fade away as they revitalize cemeteries and make them useful space for maybe solar panels or something else. I noticed that around 2010, China already had virtual cemeteries, so it totally makes sense. It's just
Mhm.
not one person's project. So I guess I'm enlightening you. Miss you much. It's MISSUMUCH.com is kind of like my mother hub where I've brought 500 different people in the death space community together to work on this project. And now it's moving it into, again, I don't want anybody to monopolize or, take this space and think that it's not one size fits all, or we wouldn't be in a mental health crisis. But if blockchain could help, I would hope somebody, maybe in this group or several can take me under your wing so that I can understand. Because I'm not trying to do something selfish. I'm trying to do something selfless with the end of my death care career. 35 years is my hopeful, like, I've got to see the fruits of, we never get holidays, we never get,
Yeah.
it's been a tough career.
Yeah.
So I think, if I made it a point to be heard today on this
Yeah.
platform, because I think I'm in good hands here. So thank you for hosting, Owen
Yeah.
and
Of
Roderick,
course. Yeah.
and everybody in the
Thank you very
audience.
much,
Yeah.
Christine.
Perfect.
Mm.
Yeah. No, I do know that. Yeah, I do know that I've to be somewhere 10:30. So I would kindly like to wrap it up. But, thanks very much, Christine, for your input and thanks for sharing the event as well earlier. Much appreciated. Yeah, so thanks everyone for their input so far. Roderick, any concluding thoughts? It's been great having you on, and I think the fact that this has gone on for well over the hour and 15 minutes now is kind of testament to the fact that your opinion is highly valued. And yeah, I'm very grateful for you.
I'm really grateful for the invitation. Yeah, let's stay connected. I'm on this adventure with everybody else. So we're all doing our best and let's make it all better. Really appreciate what you do as well, Owen. So yeah,
Yeah.
thank you very much once again for having me on here.
Yeah, wonderful. So yeah, thanks everyone. Again, check out Token Design as well, and check out DC presentation as well. That's 27 or 8 minutes, very well spent. Can't recommend it more. And yeah, for everyone else, have a great day, and we'll talk soon.
Bye
Bye.
bye, everybody. Thank you.